Hello and welcome to Leading Voices, a podcast series presented by Federal Bank exploring the transformative power of Rishtas in the lightning-fast realm of business. I'm Sunaina Nair and today we have the honor of hosting one such luminary, Navin Surya, a fintech thought leader, mentor and investor. From introducing India's first ever multipurpose cash card, its cash card back in 2006, to being a founding committee member of the Payments Council of India, Navin is among the original poster boys of Indian Fintech. Join us as we explore the intriguing intersection of finance, technology and connections. Hi Navin, it's a pleasure to have you on the show.
Thank you, Sunaina.
And diving right in, with India reportedly boasting the third largest number of fintechs, it's clearly an emerging global titan, right? And behind every titan are its strategic partners. So how do you view the role of connections and Rishtas in solidifying this titan's position?
So I would say, first of all, we're not emerging titans. We're already a titans when it comes to fintech. So if you see the traditional financial services in so many years, if you look at top 10 institutions or even our ranking, probably we have just one bank which will appear in the top 10 banks across the globe. But in fintech, probably you have many companies. In terms of ecosystem, in terms of number of companies, the funds raised, the value created, we're already third largest. And I think we are very well set in the next few years to kind of become second or eventually first. Now, obviously, how did we get here? Like you said, Rishtas. If you see last year in particular, G20, what exactly it is? It is a symbol of many countries coming together and working on various aspects and agendas for global good, right? And by the way, within that, financial inclusion, fintech has been an integral agenda if you see that. And if you see the relationship for the next phase of our growth for financial services and the country was led directly by our PM and the government, right? And again, all the regulators from financial services have participated in those discussions, and even I think similar kind of a people, whether it's a, let's say, a central bank governors to a stock market regulators, all of them from different countries have met in last whole year. And there's a lot of agenda that is put in place. So it's extremely important. And again, you look at something like IFSCA, which has been put together as a separate for a gift city regulator, as a financial services regulator. Again, the whole concept is built on India for the world, right? Where Indian companies can go out, companies from outside can come in and then work in a, let's say, across the globe, as well as probably some part of India. So the whole idea about this Rishta thing is actually there, right? Without it doesn't work. The relationship exists, that's why the money flows, that's why the transaction flows, right? That's how the more and more business happens. And in very basic terms, if you see our trade relationships, in most cases, the growth has happened, probably China is a little bit of exception, but most cases the growth has been where the relationship of India with that country has been strong. Especially if you take UK, especially if you take USA, if you take Middle East, you take even some of the other countries that are around India, it's all driven by the India's strategic relationship with them. So it's always important, I think, in any transaction, human, individual to individual, or even country to country, ultimately it's led by individuals.
Yeah, interesting thing you said there that where there is relationship, where there's Rishta, the money flows in, right? So trust is also the biggest currency,
Absolutely.
I guess, these days. And so establishing trust in technology is obviously paramount. So how do you perceive the evolution of the role of technology in fostering trust and nurturing relationships within the BFSI sector today?
Yeah. So it's a very interesting question, and I don't think anybody else has dwelled in this kind of a topic. If you see the trust, it takes time to build, right? First, you need to have a transactional relationship, you need to have then multiple transactions, and then eventually the trust built, and trust results in the belief, etc., etc. The trust is again a two-way process. One is, let's say, between a customer and the entity, and then entity, customer, and regulator and the government. If you look at India's unique model of digital infrastructure that India has created, what we call as a public digital infrastructure, the public good infrastructure, different names that we use. It started, first of all, if you see a very simple thing like opening a bank account, right? If I did not have an ID, the bank can't trust you, they can't give you a bank account. Why? Because it's very difficult for them to then understand where do you live, who you are. It becomes very expensive process for them to do a complete diligence around you. Now, if you look at a technology like UIDI, Aadhaar that we call and we all use today, it's already known to everybody, but I'm just putting a context, that's why I'm going into details, that enable that trust to translate faster. Today, an entity knows that if you have Aadhaar, which is verified by the government is trusting and they know, they are transferring that trust. It's like reference, right? The reference is directly coming from government. So I can trust. So the journey to trust between the entities and a customer got sorted. On the other side, as the technology evolution happened, as entities started working along with the fintechs and other technology partners, we saw that the overall experience, and again trust is built by the experience on the customer side. As they found that the experience is better, the answer that they get is much faster, right? Let's say if I have to go out into a branch, fill up a form, find out who's the person who will help me. Maybe out of 10 times, 2 times I don't like the other side face or probably what he told me. But when you're on a technology, you can control the quality, communication, the steps. So if it is very simple, if it is very good, it's very good experience. Again, because of that good experience, the trust start building between a customer and entities, right? So if you see the role of technology in a trust, I think the kind of work that has happened in India, especially over the last decade and a half, that has increased. And that is why the adoption rate of fintechs across the globe in India is around 69%, which is the highest.
There seems to be some kind of a paradox here, if I may just say so, because while AI adoption in Indian fintech is set to rake in billions in the next couple of years, yet the number of UPI users, it kind of pales in comparison with the e-commerce. You may correct me if I'm wrong here. So the question then remains, how do you serve customers who rely on technology, who rely on tech, but they don't seem to trust it?
If you go back to basics and fundamentals, the adoption of technology, any new, always starts with the communication, right? Then it gets into entertainment, right? And then it starts becoming transactional, which is where the e-commerce comes in. Once these rails are set, then eventually customers start trusting that I could now do a much bigger financial transaction. So this, if you again see the journey of every product, right? From the journey of e-commerce, the internet, again, initially it only for email, communication, calls, right? Some basic information, even web evolution, then to entertainment as let's say people got comfortable to see and then saw the benefit. And this whole financial services always followed that particular train, right? It never was that your financial services is going ahead. And if you see again in terms of adoption, they would always follow this curve. But this is like a necessary ingredient in society for them to get ready to start using the technology for the next level. So while I don't know exact numbers of e-com users versus UPI, to be honest, but my guess is that it would be now neck to neck. Because the reality is every e-commerce user.
I read it is almost nearly less than half. So
it can't be because the COD, one time there was probably true because the COD was the very high norm, but COD drastically reduced, right? Cash on delivery. So everybody who's using commerce somewhere is paying. The moment they are paying digitally, then they are the same customers. And I think that gap has been bridged drastically, but I agree with you that there is a gap. But again, my point was that the evolution is at a different stage. Look at the number of years e-commerce has been in the play. Look at the number of years, let's say digital payments, including UPI has been in play. And look at then the growth ratio. I think the growth ratios in the lesser number of years would be a lot more in the digital payments. Also, one fundamental thing we have to understand that the customers, for them to have, let's say, digital payments, etc., they also need some sort of a saving. They need to have some stature of a financial services, right? They need to have some basic bank account. So if you see statistically now today, there are about more than 50% bank accounts in the country with the adults, right? If you look at payments, I remember when I started early days, 2004-05, my first journey with the multipurpose wallet, its case, the Indian penetration for digital payment was less than 2%. Today you're talking nearly 30%. Now if you suddenly translate this kind of a growth, it's a huge growth in about 15 years. So the point I also wanted to highlight is that the physical currency, so far there was not really a genuine competitor. Everything else is existing because your physical currency cannot work digitally. But the currency benefit because there's a legal tender and a finality of settlement, an instant settlement. There's no payment and settlement. The only thing that can match is a CBDC, which is a government-issued digital currency, rather central bank-issued digital currency powered by government. So I think as this evolves, you will see even faster adoption wherever there has been cash, right? The chances of that getting displaced by CBDC is even higher. But we are again in the early stage of that evolution. Though India started late but very fast moving into it, I see again that becoming probably even 100 times bigger than UPI at some stage.
Right. A point taken, Navin. And while there's no debate that digital banking and fintech, they are evolving at breakneck speed. I think with customer expectations close on its heels, right? What's the secret formula, you would say, to not just meeting customer expectations, but exceeding it in this competitive, landscape? And how do you kind of get that leading edge?
Very good question. I mean, I should become a consultant. I think it's ever evolving, right? So first of all, India is not, unless you're really a company which is focused extremely on a one segment, which is rarely, because if you need to scale, you need to deal with multiple segments. And the different segments have a different need. The question is, are you able to satisfy whether different language talking, whether different culturally, in a different places, their needs, different age groups, are you able to satisfy that as an institution? That starts with that. So fundamentally, it's one that how good is your fit, how good is the experience of the customer, whether they're dealing with you in person or on the app. Are you overdoing it sometimes? Sometimes, to give you example, there are few banks where I also bank, I don't want to name them, but let's say if you have a deposit of, let's say, multiple lakhs in the account, but you get a message that, do you need few thousand loan, and keep coming to you every time. Let's say you've taken insurance with them, you paid, let's say, 6 years, a very high amount, let's say millions, and then they say, okay, do you want to take a 1 lakh rupee loan against that? So these are sometimes irritating. I'm not saying they kind of drain the relationship, but it looks like that does the entity know who are you? I mean, in today's time, when there's a technology. So sometimes overdoing and not doing the right communication can also be a problem. One thing that I've always been saying to a lot of people, that every time a customer makes an inquiry or complains, we see this as an organization as a problem. We start defending, we start fighting. I think that should change, because in my personal experience, every time a person comes with some problem, that's an opportunity for you to actually delight him. Because culturally, we all put in a lot of time, effort, focus on getting the customer in the door. And we spend so much of time, effort there, and we delight him, we raise the expectation very high. But the moment he's out, either our engagement is missing, just about okay, or it's too much. But when he needs you, when he's calling you for something, or when he's inquiring, it may be something small inquiry, sometimes it could be a huge issue. How are you dealing with him? That's your biggest opportunity. If you handle that part right, that's a secret sauce. Whether you do it through technology, whether you do it in person, whatever means, but you should look at it very seriously.
Wise words there, I think.
Well, it's just the experience that I've seen in my own business.
And it's worth its weight in gold. So now a fintech has come to be almost synonymous with disruption. We spoke about it, but so also collaboration, right? And so from your perspective, how important is it for fintech companies to build strong networks within the industry? And what would you say are its fundamental principles?
Well, by nature of financial services, right? If you see, for an example, very simple thing like payments, it's interoperable. If you see even exchanges, right? They are all networked systems. So if you see in the businesses itself, today's time, they're all interconnected. You cannot work in isolation. One has to understand that the virality or a network effect, which is what creates value in the fintechs, comes in only with the relationship that exists first in the physical domain, which is between entities, and each entities are driven by the individuals at some stage, right? So first you have to build those relationships and the ecosystem. There could be a model where you become part of a, let's say, industry association, you participate in multiple forums, you participate in multiple, let's say, events, and you kind of be out there and start building your network and relationships. The other could be that you create an engagement kind of an activity, like for example, you're doing for one bank, right? Wherein you talk to multiple stakeholders, your views, if you really have a view which could be relevant to many, right? You address them. And you do vice versa. If others are holding, you go and do it. But point is that you need to increase your in-person engagement with the ecosystem that you're working in, any business that you are in, within the financial services or fintech. The reality is you cannot exist without your ecosystem being there, because your business will have to connect.
So any interesting anecdote that comes to your mind, Navin, when we speak of the Rishta Quotient, which played a major role in the success story of a fintech, which probably you have been a part of?
So there are multiple, and probably I can just draw on one example. So let's say when I was working in my wallet company, we started engaging with a client, and there was a CEO of that entity. They were again one of the financial services. It was a new relationship. We kind of started building something together. It became successful. It's probably about 15 years before that I'm talking. Because it became successful, the mutual respect between, let's say, the two leaders grew. At some stage, let's say that gentleman left and started his own business. right? It became an additional opportunity to work with that guy for his business, again from my business. Then I moved out after exiting. Again, the same gentleman approached me to kind of, work with him in his entity as advisor on certain positions, or let's say a board member. So again, this is like one example. Same thing. There was a very large Japanese multinational whom again we were working with. At some point in time, they wanted to invest, but we sold the company. But they liked what we did. They engaged with me to kind of work with them and guide them. So I'm just giving you the multiple examples that once you engage with someone and you build your credibility with each other, those relationships go down. We keep talking about viral effect and a network effect in a technology. It happens in relationships too.
Yeah, very well said. I mean, as they say, two heads are better than one.
Absolutely.
And even unusual combinations sometimes make the, very interesting stories.
Absolutely.
Right? I'm referring to the rise in collaboration, by the way, between traditional financial institutions and fintech startup in recent years. So how do you rate the significance of these partnerships for both of them? Especially when you've got like a fresh-faced startup paired with a century-old bank.
So thankfully the times have changed. I remember when I was running my company about a decade back, right? I mean, 7 years since I left, but so let's say at that time it was still evolving. You had these large institutions which were extremely large, and a lot of things we were talking were still in the air. They had not happened. Today's time, all the statistics that we started in our conversation that we are already third largest, the value creation has happened, number of unicorns, number of successful partnerships. And by the way, the biggest success is UPI itself. If you see, there's no better global example of collaboration than UPI, because right from government's blessing to create first of all NPCI and under RBI being authorized, right? Then regulators closely approving all those products. Then again the whole banking systems coming together to support that product. From there to your TSPs signing up with them and then going out to customers. So if you see from a layer, and then in between a lot of other TSPs. So if you see, it's a success because each and every stakeholder in the economy level and a country level, and today eventually it will be a global level, right? Because as UPI is going global, is amazing, brilliant example of collaboration that has worked. So today it's a lot easier. I think the collaboration need is already established. There's no longer a fight. It's a lot more about how you're handling that collaboration. Is the clarity in your role between a large, let's say, a large traditional institution versus a new fintech entity? Is the expectation, role and responsibilities has been crystal clear?
You said it's getting easier right now. I mean, it's easier than what it used to be.
Yeah, I mean, today I go and talk to a bank. Each one of them probably have a certain schedule where they invite startups. And at times it could be just college kids. So they are agnostic today. They're absolutely prepared and aware that I might be meeting someone who has not had a prior experience, but if he knows how to solve a particular problem, because they do a lot of cohorts, right, on the specific problems, they're willing to listen to them. They're willing to work with them. But I said the equal onus is on the other side. They needing to understand that who are we talking to? While you're giving a solution, and because you've given solution doesn't make you the master of the whole trade. And that's what is probably sometimes you see the issues in the, let's say either by the RBI directions or in the industry, is because when there is a gap in understanding. So the responsibility on a fintech side is equally important, that they understand what product framework they're working in, what institution they're working with, what responsibilities that institution have. While I've delivered a solution, have I looked at it? Are they going to handle it or I need to handle it? Am I ready for it? Do I need to build capacity for it? That's where we are actually.
Wow.
Yeah, in the current ecosystem, the phase.
Fascinating. Moving on to trickier aspects of rishtedari. I don't know if it's still as tricky as it used to be, but we mentioned regulators in passing. Building relationships with policymakers, regulators, right? It can be like walking a tightrope, isn't it? I mean, you're balancing innovation, compliance. So how do you manage to keep that equilibrium and navigate regulatory requirements while also building relationships and maintaining positive relationships with the regulatory authorities?
See, in relationships, what you do in your normal human relation, you spend time, right? You get to know each other a lot better. You know each other's expectations. There's no difference between a regulator and you. Most of the time, the issues happen when the expectation and understanding of stakeholders is missing each other. And most of the time on this side, because regulators have a lot more transparent agenda, right? It's already clearly written that our job is to make sure there's no risk in the system. Our job is to be a central bank to make sure the economic stability is there. Our job as a regulator is to make sure that there's no risk to the consumers, which means we have to make sure we have to regulate and supervise for any kind of a risk. So that way it's a lot more transparently what they expect. So it's, if you are in this business, you have to master the trick of walking the tightrope. You cannot just go and do a tightrope walking as a layman. And then the financial services business is not for you, because the moment you enter this business, whether or not you're directly regulated, the compliance comes with it. The regulatory requirements come with it. So that's one thing that's changing again in this phase, which earlier you thought you have a very sexy, beautiful technology solutions, you can be a large fintech. No, you need to be also understanding the product, compliance, risk, regulatory requirement, then have this, it works, it goes hand in hand. And at times now, everyone's saying that first understand that, then you build the solution. So it's exactly like this Rishtadari, that you have to understand their expectation. If you understand and engage, right, and spend time, the issues will be a lot lesser. Like any relationship, more engagement, sometimes you do have some minor arguments and here and there. I mean, obviously with regulators you can't argue much, but let's say some bit of let's say discomfort, if you may say. But on the hand, if you are prepared, if you understand, if you have done your work, and if you're true to it, and you will do it if you're true to that relationship, right, then you will do all of it. So then you will not have an issue. And this is how we built all, if you see one of the thing, we call ourselves first generation fintech entrepreneurs, right? The fintech word wasn't coined. It was just 4-5 of us. Build as CC Avenue, me, and then few other companies. All we had to do is just keep transparently talking to RBI. We were never going and saying that we are masters and we understand everything. We always would go and say, sir, this is what we are doing. This is the guideline says, these seems to be gray area. What is your guidance? Be transparent, open about it, right? And then there are industry forum. If you can't do it individually, do it through them. That helps. And at times you get guidance that you're doing it, it's helping you, but we don't like it. So you start. So listen to them. Sometimes they keep saying, but you say, okay, they're just generally saying, this is big business for me, why should I let go? You don't take actions, then you suddenly get a surprise that you sat down overnight. So we have to listen, right? Listening is equally important in any relationships, right? And listening, not just what are the written words, it's listening to the whole environment to be able to understand that what they're trying to tell us, right, and accordingly adjust.
I think it just boils down to the very, very basics in every relationship. And I had not at least imagined that a relationship with a regulator also could be just boiled down to these very, very simple.
Yeah, ultimately, everybody is a human being, right? They have a role and a job to do. As long as you help them make sure that job is achieved, I mean, those objectives are achieved, or you're not causing any friction in their job, right? They are with you.
Right. Moving on to another symbiotic relationship, and I think this is very close to your heart because you're a mentor. I thought it's very interesting. 10 years back, I think there was a UPS report which mentioned that 70% of mentored businesses survive those crucial 5 years, which is twice the survival rate of non-mentored companies. So as someone who's deeply involved in mentoring, so many fintech startups, what do you think sets the successful ones apart when it comes to making the most of this relationship?
So it's again like a relationship, right? It's how true you are. Most of the mentors are actually at a level where it's a knowledge or a wisdom. And again, let me simplify it, that you could be having about certain subject, just the data point, which if it's combined and processed could be information. That information, if further processed and used in over multiple years, could be a knowledge. And that knowledge applied in multiple situations for longer years could be a wisdom, right? And most of the time, mentor's role is to help you with that knowledge and a wisdom part. The data and the information part is always existing with the entity. So the question is that usually the knowledge and a wisdom is like 1 line, 5 line, it's very specific direction. So a lot depends on the trust, first of all, between two entities, or rather two individuals. Ultimately, there is an individual at the last end, right? That do you trust this person like a doctor? If there is a patient who's trying to self-medicate and still going to doctor, even if it's a good medicine, it won't work, because he always have a doubt in his mind, he's trying his own research. So you have to have first that kind of a faith and a belief and a trust in a mentor. And a mentor has to be equally transparent and honest. As a mentor, you also are responsible that you talk about very clearly that which are the areas you genuinely have knowledge, you genuinely have a wisdom, and which ones you don't have. So that you only speak about those areas, and rest area, either your job is to put him to somebody who can deliver that level of a knowledge and a wisdom, or tell him that we need to work together to acquire that. any of this missing actually causes a problem. I mean, for an example, I go to any founder, I always say something. The only difference between you and me is that probably I made millions of mistakes, you made few thousands. I know the outcome of those mistakes, so I'll just share it with you. Chances are, there's a definition of a smarter person that who can learn from others' mistakes. So if you're a smart, you learn from my mistakes. It's as simple as that. So any simple guy understands that. But they need to have that trust and a faith in the mind to follow what is being said. A lot of time, because all of us say just one line thing, they think, acha, 5 minutes mein ye 2 line bola, is it okay to follow? You know, sometimes you feel you've gone to a great doctor, he in 5 minutes you had deep pain, he said, bas ye kar lo. You're not able to accept. Is this really a solution? So a lot of time that internal insecurity, internal conviction has to be there. So it's just that kind of issue, but you're right that wherever this has been symbiotic, it has worked and people have immensely benefited. And obviously they've saved the mistakes, if you save the mistake, you save the capital, you save the time. Ultimately, it's a function of value creation, right? When you save this.
What do you personally derive out of this?
Oh, well, I think all of us look ultimately for happiness, which comes from satisfaction. When you see that your knowledge is helping someone either create more value, or avoid the mistakes and a destruction that can cause, I think nothing can beat that whole, I would say, excitement. Not excitement is not the right word, but let's say the kick that you get out of it. That, for me, that actually has always been a motivation. And I'm someone, even when I was in HCAS, even when I was at PCI, I've never said no. If somebody asked me a question and if I knew the answer to it, because I thought if it can help, we've always told that there's only one thing which grows if you distribute, that's knowledge. And I genuinely believe in it.
Now I want to get in, one of your key career highlights, if I may say that, which also I think stands testament to the power of whatever we've been speaking of, forging connections, right? Your role in shaping the Global Fintech Fest, the GFF. You've been the founder and the former organizer of it, and it is considered as the event you need to attend if you're remotely connected, with fintech globally. So can you share a bit about your experience and learnings of building this mammoth event, bringing together nearly 20 stakeholders, right, on one single platform?
A lot more than that, but
okay.
Yeah. Probably a few hundreds, but yeah.
My stats are all over the place.
No, that's okay.
So many shareholders on one single platform and elevating it to this level of credibility.
Well, first, I mean, I always get more credit than I deserve, but
You're just being
so as a person, I've always enjoyed doing things which don't exist. As a person, I always enjoyed when I could bring diverse set of people together. I started my financial services fintech journey in year 2000, nearly 25 years. And similarly, along with the other ecosystem players like Vishwas Patel, Srinivas Jain, we all built these associations together, we got people together. We were always already used to working with common issues, common agenda with the community. One thing we realized that every time in the fintech ecosystem, despite we being the third largest, when it comes to thought leadership, you always look towards West. Sometimes you look towards China, but there's hardly anything to get, right? Because you don't get much info anyways. So I realized even during my business at Rishtas, we used to go to Money 2020, which was the largest, biggest event when it came to payments. When it came to banking, everybody was going to Euro for Cyprus. When it came to fintech, everybody went to, let's say, Singapore. And we visited all these places and amazing properties. And I mean, I still get inspired by many of the kind of work they've done. One thing always used to kind of go in my head, and I remember the last Money 2020 that I attended, probably somewhere around 2016 and 15. I remember even NPCI Dilip being there. And we sitting on the sidelines just for 5-minute catch up during various breaks and just looking at the ecosystem and thinking, will we ever have this kind of an ecosystem and this kind of an event in India? That seed which was planted long back. And this was always aspiration because we knew that while we are going, we are getting something, but if you really do the ROI on that, you don't really get it. Because a lot of things are not relevant to you and a lot of things that are happening here and the kind of time you get for India ecosystem is not adequate. And we saw the same thing even in things like SFF because it's a market where everybody comes to sell. So there's only sellers is one side. There's no demand because there's no local market. So a lot of these factors always put us aspiration in mind that can we create a thought leadership platform which resonates with your stature of third largest ecosystem, going to be second and eventually first, why cannot we be a kind of unique platform for the world, for the fintech to interact with India, right? And work with all the existing players. And I think this leadership bit in last 5-7 years has been very, very clear in everyone's mind. That, and as I said, because we already have seen success with UPI, we've already seen success with UIDI, we've already seen success with a lot of interesting innovations we've come together in last few years. So India's image has drastically changed. Today, if you are a fintech founder from India, what you say is taken very seriously because they know that what we're doing is for the scale. Also, interestingly, because India has all kind of a community, all kind of customer segment. So your products actually have been tested across different segments. So the relatability or a relevance is also at a much larger global scale. So all these were the background. So it was very easy that we needed, and everybody who has been there, they always said that can we do that in India? So that was one common thread which brought all of us together. Some of us, we came together, obviously people like Navin Surya from XRBI himself, Chris sir, they all agreed to this vision and they said that we all are very clearly willing to put time, effort, and mind you, these are all non-commercial. It's a not-for-profit event, it's all non-commercial time that everybody has agreed to give from a top. And then we talked to Reserve Bank, then we talked to SEBI, then we talked to IDA. Eventually, everybody agreed that we need to do it. And if we have to do it, we have to make one large, big global platform. Then we all have to come together. Because if you want, let's say, some 30% of your people of 65,000 stakeholders present there over 3 days, then they have to have a meaningful engagement with all of you at that one place. All of you have to be there for them to be here for those 7 days or those 3 days. So they know that if I go there in a week, I could achieve a lot. I could meet all this who's who. And again, is it relevant from a student to a industry leader, to a mid-level executive, to a startup? And that's, so we had to do a lot of work, but net, I think it was about the one common vision. It's about being true and honest to what we're doing. It's more about achieving the outcome than looking at any of the personal objectives. That is what has worked. And I again wish them all the best for this year. I'm sure they'll do even bigger this year.
We just have one last question, and I think we've come full circle again. We spoke about, wishing you Godspeed, of course, and the industry. So we began our discussion with the concept of titans, right? And with great power, I'm sure you'll agree that there also comes great vulnerability. And how do you perceive...
I thought the real quote was responsibility, but I'll accept it.
Responsibility, but also vulnerability, because nobody really talks about being vulnerable. So do you think there is power in being vulnerable, by the way? And how is it that you perceive this whole term?
See, I think everybody is vulnerable in some areas, some less, some more. And I only see this as an opportunity to improve your strength and grow stronger in one more area. So it's difficult to say, or it's impractical to say that there is no entity who is not vulnerable, whether small or big. The nature of the vulnerability could be very different. Sometimes it could be reputation for a larger institution, sometimes it could be a security threat, sometimes it could be cyber related. For a smaller, it could be even survival, right? So those are always there. I've always seen in my life, those need to exist because they make you keep running, right? If something doesn't exist, then only you go after it. If everything is there, you get complacent. So the fact is that this is how the nature works. There's nothing like a perfect system. There'll always be some curve going in a wrong direction. That's only an opportunity for it to be slightly better next time, which may lead to something else. I've also recently read in a book that the greatest good also can cause the greatest evil, right? So it's never like a perfect state and a fixed state in life for an entity, for an individual, or anything in that matter. I think the biggest part for every organization, including the titans, is are you aware of those vulnerabilities and weaknesses? And are you kind of willing to work towards that? Are you honest enough to admit that to yourself? Maybe not to public, that can send the sales crashing down, but are you really working on it diligently rather than being in denial? The problem happens when you are in denial and arrogance that what can happen to us? We are the largest entity, nobody can touch us. The moment you get in that mind frame, that's when the problem starts. As long as you keep your head down and say, okay, I know, I've got up today, 3 things were good. What can I do today for these 2 things to improve? That's what the corporate journey is all about.
Brilliant, Navin. This has been so delightful. Thank you so much for your time.
Thank
sir.
you. Thank you.
Well, I think we have a clear verdict. Regardless of whether you're a titan or a newcomer in the realm of finance and technology, ultimately, it's the human quotient, relationships, trust, and collaboration, which remains at the heart of fintech success. We trust you enjoyed this conversation. Keep an ear out for more compelling tales on leading voices. Remember to show your support by liking, sharing, and subscribing. Until we meet again, keep listening, keep connecting.